Hello and welcome to the Business Standard Banking Show. The banking sector is going through an excellent phase. Profits are rising, bad loans are coming down, capital positions are increasing, and business growth is very robust. But will the good time last? The Reserve Bank of India has recently increased risk weightage for unsecured loans. To discuss some of these issues, we have today a very special guest. Dinesh Khara, Chairman State Bank of India, is with us today to discuss some of these issues. Mr. Khara, welcome to the show.
Thank you. Thank you very much.
Before I come to the domestic factors, I would like to ask that the US Fed has paused and they have indicated that they could bring down interest rates from next year onwards. Do you think domestically RBI will be in a position to cut the repo rate from next year?
Well, RBI is very clearly focused in terms of looking at our domestic inflation rate, and we are still at more than 5% of the inflation rate. We have seen that in the past also. As far as our monetary policy is concerned, it is quite decoupled vis-a-vis US. But yes, of course, it's a very positive indication when it comes to FOMC, Fed having indicated that there are likely to be 3 rate cuts. We are hoping that maybe somewhere from the middle of the next financial year, maybe we'll perhaps get to see some reduction in interest rate, but it is subject to the inflation trajectory moving towards 4%. So I think we'll very closely wait and watch how the things evolve going forward.
How do you see the RBI's steps to conduct a VRR in the banking system, given that there is liquidity outflow due to advance tax?
I think it's a very pragmatic approach. The RBI does not want to unnecessarily impact the system because advance tax is a reality and it will certainly lead to the liquidity outflow. Just to maintain that adequate liquidity is available in the system, this appears to be a right step in the direction.
Right. Now let us come to some of the regulatory aspects that Reserve Bank of India has initiated. For example, the increase in risk weight. While banks are in a very good in terms of capital, they may not have much impact on capital. But what is the message you are seeing?
I think the message is very clear. Growth is good, but effort should be for the healthy growth. Unhealthy growth is something which can prove to be having a negative impact on the economy. So that is not intended. And with that in mind, this kind of a step has been taken. But I think this message has to be read in the context that even earlier also, before COVID also, the unsecured credit was subject to 125% RWA. And during COVID only it was brought down to 100. And since the COVID is behind us, so I think that we have gone back to 125. So I read the message in that context.
Do you expect some slowdown in growth of the unsecured loan credit?
I think retail, particularly unsecured, was growing at a very fast pace of about 30-33% in the system. We had slowed it down. We had come down to about 18%, 17-18% we had come down to. And we expect that we will continue to grow at that pace. We had already slowed it down.
And loans to NBSD, are you planning to slow down that also?
No, it's not that we are slowing down because we have got a portfolio which is about 3 trillion is our total NBFC portfolio. But out of this NBFC portfolio, very significant portion, as high as about 2.7 trillion plus, would be actually to very well-rated NBFCs. Some of them are government-owned, others are supported by very strong financial groups. So, very strong industrial groups. So that is something, that's the kind of a composition. So, but I would say that we have been very conscious while we are lending to NBFCs. And we have strengthened our underwriting practices for quite some time. And I would also mention that of late, even RBI has strengthened their oversight and have also come out with the guidelines for the NBFCs, which actually enhances the confidence of the lending community while they are lending to NBFCs. So I think it will not really have any impact for us. But yes, of course, the increased RWA means that the cost of credit will go up for these NBFCs.
Exactly.
depending upon the kind of a risk which is there.
And what is the impact on your capital position? The capital adequacy ratio is 14.
We have assessed the overall impact of the increase in RWA for NBFCs and also for the unsecured credit put together. It will all come to about 0.70 basis point.
Now, coming to the business of the bank, till September, the credit growth was extremely robust, 12.4%. Do you see that this kind of credit growth to continue for the remaining part?
I hope so, because when I review my daily numbers, I get to see a traction which is more on those lines. So that gives me the confidence that perhaps we should continue to see growth around the same numbers, or maybe a little better also.
And what kind of projection you have for the current financial year credit?
I expect that it should be somewhere in the range of 14 to 15%.
And your CD ratio is somewhere around 71%. Do you expect that number to go up?
If we look at our domestic CD ratio, it is actually about 66%.
Okay.
If we look at our domestic and overseas, then it would be about 72%. So it might improve about 100 basis point or so. That is what we expect.
On the credit part, what is your view on wholesale loans? Do you think there is project demands for wholesale loans?
We have pipeline which is about 4.5 trillion, 4.7 trillion to be precise. And that is a very clear reflection that people have evaluated the investment opportunities, and they have already reached out for seeking the sanction for the proposals. But this number will not show up immediately as far as the credit growth is concerned. There is always a tendency. Majority of them are the term loans. The term loans will get dispersed over a period of time. And also there is always a lag between the sanctioning and the disbursement. But the more important indicator for that would be if we look at the kind of investment commitments which the corporates have made. In the year financial year 22-23, this investment commitment was to the tune of about 35 trillion. And the year prior to that, in the year 21-22, it was to the tune of about 22 trillion.
Okay.
And this year, in the first half of the financial year, this has been to the tune of about 20 trillion.
Okay.
So when I look at this data, it augurs very well in terms of the likelihood of the investment getting reflected into the bank's loan book also, but it will get spread out over a period of time.
Over a period of time. Now, coming to deposit mobilization, SBI's deposit mobilization has been extremely robust. 12% deposit growth SBI has clocked. Many banks are facing the mismatch between credit growth and deposit growth. SBI, that is not the case for SBI. There are certain private sector banks which is also very aggressive with the deposit market. Are you conscious of the private sector banks' effort on getting deposits, and will you be able to hold on to a market share in deposits?
Our effort is to ensure that we stay ahead as far as the competition is concerned, and we have, of course, tweaked our interest rate in certain buckets, and to ensure it is actually based upon our own assessment where the depositors would like to keep the money. I think we feel confident that we should be in a position to maintain our market share in the deposits.
Any thinking on revising interest rates on savings account deposits?
In fact, savings bank, we have to, interest rate is only one component. In savings bank, we offer many frills also.
Correct.
So the cost to the bank is actually interest rate plus the frills. So I think on that particular account, I feel that for the time being, we don't have any such proposal under consideration for increasing the savings bank interest rates.
There has been significant improvement in asset quality, both in gross and net NPA in the July-September quarter. Do you see further scope for increasing asset quality? Do you see your numbers, the ratios will come down further?
Our effort would be that the kind of credit cost which we had was about 0.26. And also the net NPA much lower than, I think our effort would be to keep the net NPA at the level where we were, and if possible to improve it also. But yes, of course, it's a constant effort on the part of the bank to continue to improve the quality wherever there is a scope for it.
How do you see the recovery efforts? Are recoveries on the lines as you?
I would say that it is quite good. and even the kind of slippages which we get to see, we invariably are in a position to recover a significant portion of those slippages in the next 10 days or so of the close of the month. So that is essentially attributed to the fact that we have invested well in terms of our recovery efforts on the ground.
What is the amount of bad loans you want to sell to the ARCs in the remaining months of the current financial year?
Much of it depends upon the kind of offers which we get on such loans. We evaluate all possible options. It would be compromise, it would be ARC, it would be NCLT, it would be DRT. All options are evaluated, and based upon that, we take a call where we are in a position to derive maximum value. We normally resort to that route.
But do you have a ballpark number how much you want to sell to ARCs?
No, we had for the current year we had decided a recovery budget of about 8,000 odd crore, and hopefully we should be on track.
Now coming to capital, now your capital adequacy was 14.28% as of September 30. CET1 is also I think around 10%. But do you see any need for equity raising in the current financial year?
I would like to draw your attention to the fact that last year we earned profit which was more than 50,000 crore.
Yes.
We had plowed back 40,000 crore out of that. And the year prior to that, we had made a profit of 32,000 crore and we had plowed back 25,000 crore. This year in the first half, we have already earned a profit which is more than 31,000 crore. So we have a plan in mind to plow back a significant portion of the profit which will earn in this current year also. So I think we have seen that this organic plowback of profit is perhaps the best of the channel for supporting the equity of the bank. And if we succeed in doing that, the numbers which we have in mind, I would say that our capital adequacy ratio will go up by almost about 140 basis point or so.
If the plowback happens in this current financial year also.
Yeah, if we maintain the trend which you have seen in the past, if we stick to that, so we expect that kind of plowback to happen. So I think this is perhaps the best of the route for augmenting equity. But in any case, we have approval from the board for raising tier 1 of 20,000 crore, and out of which about 13,000 crore we have already raised. And we will be raising the remaining amount in the current financial year.
Right. So last year profit was 50,000 crore. In this year, in 6 months, it's already 31,000 crore. So that augurs well with your thinking that plowing back of profit is the best part. Capital markets are pretty buoyant. The Sensex has hit another new high today. Is there any plan to list any of the subsidiaries in the near future?
Not for the time being.
One more thing I wanted to ask you is that recently the RBI is talking about the self-regulatory organizations, SROs. For the commercial banks, is there any plan to have an SRO?
We don't have any such plan under consideration.
Commercial banks don't have. And finally, you have completed 3 years in SBI in October this year. What are the unfinished tasks for you that you want to take up immediately?
No, we have already taken, in fact, 2.0 was something which was unfinished and we are working on that, 2.0. It's a work in progress, I would say.
And when do you see the fruits coming out?
It's a bit of an ambitious project, it will take some time. But nevertheless, I expect maybe in about another 4 to 6 months' time, we should be in a position to see some early minimum viable projects in place. It's a continuous improvement in our existing. You must be experiencing an improvement. There are some incremental improvement. There would be some path-breaking improvements also.
In UNO 2.0.
In UNO 2.0.
On that note, Mr. Khara, thank you so much for speaking to Business Standard. It was a pleasure talking to you.
Thank you very much. All the very best.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker
to every Indian.